In this series of videos, I'm discussing the very important question of whether Hurst cycles actually work. My name is David Hickson. I'm the creator of Sentient Trader, which is a software application that analyzes the price movements of any financial market according to the ideas published by J.M. Hurst over 50 years ago. In this video, I am going to be presenting some evidence for the fact that Hurst cycles do work. But before we discuss that evidence, I must ask you to please make sure that you have read and understood these disclaimers. So let's consider whether Hurst cycles work. The first thing that I should point out is that often people ask this question in the context of whether Sentient Trader, the software application that analyzes price movements according to Hurst cycles, actually works. The answer to that question, according to me as the creator of the software, is yes, indeed, the software does work. But you don't need to take my word for it. I would encourage you to go to our website, sentienttrader.com, and take a look at testimonials on the website written by the professional traders and investors that have been working with Sentient Trader over the past 12 years. But Sentient Trader is simply a tool in the hands of an analyst or a trader, and it performs an expert Hurst cycles analysis, which brings us to the more important question, in my opinion, which is whether Hurst cycles themselves, or whether an understanding of how the cycles influence price movements, can help us to make more profit out of our trading and investing in financial markets. In order to answer that question, we need to understand what Hurst cycles are. I have a separate series of videos which discusses the basic concepts behind Hurst cycles, but it suffices for now to simply understand that Hurst cycles provide us with insight into when markets are expected to turn. An analyst and a trader would then use that insight to make trading decisions. So let's take a look at a piece of evidence. In order to do that, we are going to go back in time and take a look at a tweet that was made on the 21st of April 2020. Here is that tweet. You can see that it was made at 7 p.m. on April the 21st, 2020. The analyst who posted the tweet is also called David. That's not me. I am, of course, David H. This is David F., whose Twitter handle is @TradingHurst. This is a tweet about crude oil. He says here, stay on target, ready your longs in the next month or so. At least a 54-month nominal low is forthcoming. What that means is that the 54-month cycle is about to form a trough, or a low point in price. He mentions that the CML, which is a cycle tool in Sentient Trader, the acronym CML stands for Composite Model Line, shows an approximate path of price over the next couple of years. The 18-month component, he mentions, shows solid frequency. So let's take a look at this picture in a little more detail to understand what he was saying in this tweet. Here is the chart that was tweeted on that date, and the cycle analysis is shown at the foot of the chart. Each one of these piles of diamonds represents a low point in a particular cycle. You can see that the cycles are color-coded. The yellow cycle is the 18-month cycle, and it is mentioned in the tweet that the wavelength has been fairly consistent for the 18-month cycle. Over here is the important message in this tweet, which is a very neat stack of what we call a nest of lows. That indicates the time at which the next trough of a range of cycles is expected to occur. Now, the CML that is mentioned in the tweet is a little difficult to see in this picture, but I will draw over it. It's very faint, and I will provide a link to this tweet so that you can go and have a look at this tweet for yourself. But this CML, as mentioned by David, is indicating a potential path for future price action. And as you can see, it is indicating that price is expected to move up. That is the simple interpretation that results from having performed this Hurst cycles analysis. Let's take a quick look at the price of oil and see what actually happened. Here is an updated chart of the price of crude oil, and this bar over here, this is a weekly chart that we're looking at here, and this bar contains the exact date of the tweet that we have just been looking at. The analysis has of course been updated, and there is the marker for the 54-month cycle trough that was anticipated in the tweet. As you can see, the price of oil moved up following that formation of the 54-month cycle trough, exactly as expected in that tweet. So to come back to the question at hand, do Hurst cycles work? In terms of providing insight into when markets are expected to turn, I think you will agree that tweet provides some evidence that they do work. There is much more to Hurst cycles than providing insight into when markets are expected to turn. We can also generate price targets on the basis of cycle tools, which I will be discussing in future videos. And a very important point to make to round out this video is that we need to move from performing an analysis and gaining that insight to making trading decisions. The Hurst cycles approach also provides us with cycle tools which enables us to inform our trading decisions. Look out for future videos in the series about whether Hurst cycles work.